Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2023 question number 9. Question number 9 and question number 10 are directly connected to one information. What is then the production cost calculation? Look here, what is the requirement of question number 9 and 10? Firstly, we must identify the question number 9. What is the prime cost? This is a primary cost for the year ending 31st March 2023. Second one, what is the total manufacturing cost for the year ending 31st March 2023? Firstly, we must identify the structure of manufacturing account. Look here, this is the statement of manufacturing account. Manufacturing statement. This is statement of manufacturing cost. This question is related to million. There is a rupees million. Okay, all informations, all values are they supplied as million. Okay, let's see what is the guideline. Firstly, we must identify the total primary cost. Total prime cost. Based on the prime cost, how can we calculate? Firstly, we identify the direct material cost. This is at the direct material cost identification, we must identify the consumed direct material cost. Okay, used direct material cost. How can we calculate? Opening direct material. We add material purchasing. After that, we deduct closing direct material. Direct material means raw materials, no? Direct material. After that, we can calculate consumed raw material. After that, we added, what is that? Direct labor cost. We add direct other costs. We can calculate prime cost. Okay, this is the total prime cost. Look here, this total prime cost, there is a another addition. Why? There is a work in progress adjustment. Work in progress adjustment was done in prime cost. Why? I said that this question said work in progress was adjusted to the prime cost. Look here, work in progress is valued at prime cost. Okay, therefore there's a primary cost. This is the total prime cost before the work in progress adjustment. Okay, before we at this point we do not adjust the work in progress. Therefore, we must rewrite total prime cost before work in progress adjustment. After that, we must add opening work in progress, and we must deduct closing work in progress. After that, we can identify total another prime cost after the work in progress adjustment. Okay, this is the another value, total prime cost after after work in progress adjustment. Okay, after that we add, what is that? We add production cost, overhead. Okay, overhead production cost, overhead production cost. Okay, after that we can calculate what is that? Total production cost. Okay, total production cost. Okay, I read the whole question, and is this information included all areas of this manufacturing account? Okay, manufacturing account. Okay, let's see the question. Look here, they said that this is use the following information to answer question number 9 and 10. Earlier PLC, a manufacturing business, commenced its operation on 1st April 2022. This is the opening, this is the new, the business. The closing date was 31st March 2023. This was opening date was 1st April 2022. This is a year gap. This opening started company, this opening date they commenced their business. At that time we can imagine that the opening date was the opening date of the year. Okay, at that time we can imagine there is no opening inventories. Why? They firstly started their business in 1st April 2022. This opening date was started. There is no remaining opening inventory, so opening assets in the company. Okay, there is no, we can imagine that there is no opening direct material. Okay, there is no opening direct material. Okay, only closing materials. There is no opening work in progress. There is no opening work in progress. Okay, why? They started their business in opening date. Okay, let's see the question. Next one, the following information relates to the transaction occurred in the business during the year ending 31st March 2023. Let's see. Cost of machinery purchased on 1st April 2022. Okay, this is opening date acquisition, no? Okay, cost of machinery purchased on 1st April 2022. The cost of machinery directly we cannot include to the production cost. Okay, cost of machinery we did not include, okay, do not include to the production cost, but depreciation should be added. The useful lifetime is 10 years. You know how can we calculate depreciation? Cost minus residual value 0, therefore 8,000 divided in 10 years. Okay, 8,000 divided in 10 years, what's the depreciation? 800 is a depreciation machinery. Therefore we can include this one where machinery depreciation is related to the overhead, production overhead cost. Okay, this one production overhead cost, no, this one is production overhead cost. Machinery depreciation was 800. Machinery depreciation. Okay, machinery depreciation, we do not include the cost of machinery, we must include machinery depreciation for the year. Why? Opening days word, acquisition date, total year, we can identify the depreciation expense. Next one, cost of raw material purchase 5,500 million, no, 5,500 million. Material purchasing is material purchasing 5,500 million. Okay, next one. Direct labor cost 4,000. Direct labor cost is there. This is one. Direct labor cost, we can include this one, the area 4,000. Second column. Okay, direct labor cost. Next one. Production overheads. This is production overheads excluding means without machinery depreciation. Excluding machinery depreciation means not included this 800. Okay, therefore production overhead 800 million. We can production overhead there excluding without depreciation. Depreciation is separate one. Without overhead costs, without depreciation, we can identify another overhead cost are 800. Overhead cost. This 800 was not included depreciation expense. Okay, therefore depreciation separately identified. Okay, next one. Additional information is there. 20% of raw material purchased remaining as inventory as at 31st March 2023. This is the closing date. They said 20% of raw material purchased. Purchase means cost of raw material purchase was 5,500 million. Out of 20% of raw material purchase remained balanced as the inventory as at closing 31st March 2023. We can identify 20% of this one. 20% of 5,500 was 1,100 was inventory as at closing. Therefore 1,100 million, we can identify what is that. Look here, closing direct material, there's a remaining balance is 1,100. We must deduct. Why? This is the deduction. Okay, next one is there work in progress as at 31st March 2023. Closing or opening? Closing. Okay, closing was 450 million. The work in progress is valued at prime cost. We know closing work in progress 450. Closing work in progress is there. Look here, work in progress, opening work in progress we know 0. Closing work in progress 450. I write this one, this area, no? Cut it, no? 0 and 450. Okay, 450 you must deduct. Closing work in progress you must deduct, no? Deduction. Okay, next one. Next information. The raw material costing 550 million was fully destroyed during the year. This the destroying was not this 550 was destroyed, meaning was we do not consume to production. Okay, therefore we can eliminate this 550 from this purchasing. Therefore we must deduct from 550. This is not related to production cost. Why? The production cost means yogurt, no? The yogurt do not include this 550. Therefore we do not consume to production of yogurt this 550. We can eliminate it. This is the destroyed material. This destroyed material, double entry was there. I write it, double entry was destroyed material expense debit. debit 550. This is the expense. This expense was identify other expense, no? Other expense. Other expense. Other expense. Credit to material purchasing. Material purchasing. Material purchasing. Credit. Credit. Material purchasing credit means this is a production cost. Production account credit. The material purchasing or production cost account means credit 550. This 550 credit shot was included in this 550. Okay, next one. At the production cost preparation, you must be deduct from the material purchasing this destroyed stocks. Why we do not consume this inventory? Okay, let's see. This is the final one, no? Okay, let's see what is the requirement. Firstly, what is the prime cost for the year ending 31st March 2023? Primary cost we must calculate. Firstly, we can identify this one. We can use calculator, no? Calculate there. Okay, let's see. 5,500 minus 550. Sorry. Minus 550 minus 1,100 equal 3,850. This is the consumed raw material. We can carry out this one 3,850. The direct other cost is no, we can not identify. We can add this 7,850 is total prime cost before the work in progress adjustment. Okay, this is the primary cost before the work in progress adjustment. After the work in progress adjustment, we can get another answer. What is that? Total prime cost after the work in progress adjustment. We can identify another answer 7,400. There's a two prime cost. Total prime cost after the work in progress adjustment, before the work in progress adjustment is this answer. The answer sheet we can identify two answers 7,850 and 7,400. There are two answers. We can identify prime cost. This is the answers. There are two answers. 9. 7,850 and 7,400 is there are two answers for question number 9. 102. Both are the answers of question number 9. Okay, in next video we meet question number 10. Question number 10 is easy one. We already calculated. Okay, in next video we must find the answer of question number 10.